None of BPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of BPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice to.
Good morning, everyone. Monday morning, here we are. Actually, when I was writing commentary last night, I thought it was going to be a boring week. There's actually quite a bit going on between earnings and when I started looking at all the different reports coming out. We've got basically the old Humphrey Hawkins annual talk with Yellen and the Congress going on. I love watching them and see their stupid questions that these guys have. These guys, I don't think they don't even, it's amazing how much they don't know. These are our elected officials. They're supposed to be the Senate Banking Committee. If you went through, I think the IQ is 12. It's crazy. These guys there's a couple guys that actually understand some things, but it's amazing the questions that are asked. My 13-year-old could ask better questions sometimes. Anyway, enough trolling Congress. Unimpressed at best. Anyway, some things going on here. Good morning, Mitch.
Morning.
Why don't we talk a little bit about the news and all that stuff? What's going on here?
This morning Citigroup announced their earnings. Consensus prior to the release was the earnings per share being $1.05. They exceeded that with $1.24. This is in spite of the massive write-down that they took after the settlement with the DOJ. I think we talked about this a week or two ago, maybe a couple of weeks now.
I think it was last week.
Was it last
no,
week?
I don't know. I don't even know what you're going to. I don't even know what you're going to say, and I'm already telling you what it was. So go ahead.
As far as the Department of Justice now coming back around to each of these companies, sort of like an agent for the mob coming back around to these people that they supposedly offered protection to.
Yeah, like I said, I did talk about that because what I was saying is that it appears that they let all these banks get healthy. They gave them money, got them back on their feet. Now that it looks like they have money, they're sucking all of the capital out. So the banks are going to be pressed, accumulating their regulatory capital so that they can operate within the Basel thing and every other thing that's out there on the planet that everybody has to comply to. So the banks aren't going to be able to expand their balance sheets. They're not going to be able to lend. The economy is going to continue as they suck it dry. And there was a story I saw a little bit ago somewhere I was looking through, and the DOJ said there's more mortgage litigation coming. I go, oh, I'm sure there is. So yeah, they're just taking billions and billions of dollars, and this goes to part of how the big government's paying for itself as well, is just penalizing the economy and companies everywhere they can. And not that maybe these guys don't deserve this, but I still think it's interesting how this approach that they're doing. Anyway.
Yeah, but in spite of that, Citigroup, they're trading higher today on the news of the earnings. I think they're about 3% higher at this point. The market's trading higher, so that's a good way to start the week.
Yeah,
had some selling across the board in the system that we'll get into in a little bit. So I mean, it's a great way to start the week if you have a little bit of selling for the market.
Yeah, no, it is good. No, it is good. I don't have really complaints. So it's just frustrating watching this. Living in a border state too. It's just all the stuff that's going on. It's getting pretty crazy here. I know probably most of you aren't affected. There are some maybe that are watching this are affected by this stuff. But it's getting just sort of completely bizarre, crazy. What's going on. Somebody pointed out what country, how could it be a country if it has no borders? So I guess John Lennon wins, right? This is what he was singing about in Imagine.
Yeah.
So maybe that's it, and maybe he would have come up with the Dreamers as well. He would have wrote that song later if he would have been around to do so. Anyway, but there's a lot of stuff that's going on financially. I discussed a little bit in commentary that I believe that this is really the underlying tone continues to be bullish. You can't knock this thing down. And a story out of Portugal that went from front page to page 42 in one day. That there was never a material story to start with, and it's certainly not material now. And I watched a little bit of European TV last night to CNBC Europe, and they hardly mentioned it. It's way in the back. One of the things that is out there on the ECB, and this is probably helping to improve sentiment today, is that the Draghi has got another $1 trillion supposedly out there for cheap money for the banks for the next several years. So, you start wondering where does the balloon burst? When does this bubble burst, or whatever it is? They're printing the money. They're willing to put it out there, and we're continuing to see this expansion. So I guess enough trolling all the politicians and central bankers, right? Expect Yellen to say more of the same that she's been saying. I can't imagine she's going to say anything other than what she's been saying. I mean, it's pretty much a broken record, but there's always a potential for a surprise. But somebody might find one line or one word that she said that they'll grab a hold of and make it negative. But for the most part, I think we're in this mode, and we're going to go ahead and get started on the markets here and start reviewing what's going on as far as everything that's out there. So I'll go ahead and go over to the screen, and I've got the S&P cash up here. We'll talk. We're still not in trend mode, even though we're seeing some rallying here. We're up 1138 now at 1978. We're very close to the extreme of the day. We're at right at the extreme was 1979.25 as far as the projected numbers goes on the VPM rangefinder. You just you're pretty much printing up there. I mentioned in commentary it closed over this 73.40 level today, would set the tone for another test of this 1985 highs that we made. I guess it's been 7 days ago or so, 7 or 8 days ago. And it's just the overall pattern that continues to unfold is what we've been going. I'm going to take the trading system off here for just a second here, just so I can clear up the screen. There's a couple things that have been going on with this. Patterns have been so tight, and especially on the dailies, we've seen quite a bit of dynamics. We've talked a lot about the VPM Fibonacci projection tool. It had a new objective the other day. Let me bring this up. Make sure I'm not in the way. I'm not. This tool had put out there a 2030, 36, 2015, and 2025. That was negated when we declined last Thursday. Even though we reversed and closed higher and we moved off those lows, it negated a pattern by triggering below a key low in that pattern. So we currently have no objectives at all. I talked about this in commentary on a short-term basis. Intermediate term basis has a similar situation. We'll go through that in a minute. But looking at the PPMs here, PPM 1 is 0.09, 0.11, and 0.13. So anything, we need a 0.25 on these indicators to suggest there's a trend. So my best guess is, as I talked about in commentary, that we are in a sideways pattern right now. Extreme 52, which was Thursday's low roughly, and the high of 85. We're probably going to work that pattern. We'll see if we get up there. Probably not a lot's going to go on. Maybe after some of the testimony tomorrow and Yellen, and there's plenty of stuff coming out on the news from that standpoint coming out there. They're not really, I wouldn't call them material, though. Retail sales, I believe, comes out tomorrow, and that may have some impact on the markets as far as sentiment goes. And it's really about earnings right now. And as I also mentioned in commentary, that we're probably likely going to continue to see slight more of a tendency for it to beat. That's usually how it happens. It's about 65% of the stocks will beat, and there'll be some misses. And even with, as mentioned with Citibank, they didn't care. They got drained. They got tapped out for $7 billion and missed and everything else, and the stock's still up. So no one actually cares. I don't know what they care about. It's difficult when you see these kind of stocks and they get a pop like that. Are we long that, by the way, Mitch?
Let me double check that.
Take a look at that while we're talking about it.
We are flatted on the 3.2 weekly system.
Okay. And I haven't really looked at the trend. Maybe we'll bring that up when we go through some stocks. But the bottom line is this pattern has been very similar all along. And I'm just going to get my tool out and sketch this out. But you really have gotten these little sideways patterns and surges. And we've just went through another pattern. And now are we going to go back up? Again, we'll see. I talked about this pattern that's unfolded at 16, actually at almost every 100 points on the S&P all the way up, but definitely 16, 17, 18, and 1900 where we got up to the even number. Is in Trader Talk, we call it the figure. Whenever you get up to the whole number, the 1900s, the 2000s, we seem to get the same type of volatility each time. We'll get a little bit over it, and we've declined in most cases between 65 and 80 points. That's S&P points. So we would go from maybe a little bit over 2000 and retrace all the way back down to maybe 1920 or 40, around that range, and get a lot of choppy action, and then it seems to go forward. One of the objectives that I mentioned on commentary, and I'll mention this again on when we look at the weekly charts here in a minute, but was a 2126. There's actually one number even beyond that, I believe, that is popping up on the screen as well, just from a Fibonacci ratio standpoint. So there's still some potential on the upside. This thing doesn't want to stop, and it looks like it looks like it's not a perpetual machine, but it certainly looks like we could see another somewhere between 6, 8, maybe as many as 12 weeks. We can have another better part of a quarter, maybe getting into October, before we'll see any potential for any downside. I know it sounds kind of boring, but is what it is. I was going to find a version of Summertime Blues again. I keep forgetting to do that, so I can play it in the background while I'm talking. It's some entertainment anyway. But so let's go and look at the weekly graph, and same old. We've improved. We were at 0.48 the other day, so the momentum on the PPM1 has gotten a little better. It's 0.52, 0.36, and 0.37. As I mentioned, these are all in trend level. We're still expanding. The general trend is still expanding, where the PPM1 is moving faster than the other two. So this trend is still is moving and expanding. So these moving averages I've talked before, when they're in a trend, they will spread out as they get stronger to a point, then they contract. And there's certain elements that come up that we'll talk about here in a minute. There is a potential pattern starting to unfold on the monthly graph that would suggest that we're getting at least close to something here, possible highs. But if you notice, there really are no objectives as well on the intermediate, because we've been in this pattern. We've actually satisfied. If we go back here, let me bring up the tool so we can see this, the window, and you can see it was 1927 to 1975. Well, we've exceeded that. We're trading right at 1978. This is the upper band of the original objective that came out. And let me get to the first one. This came, just trying to find the date here when this first came out. So it was back in May 9th of this year was when this projection came out. So we've satisfied that projection. It's continuing to be valid, but we're not really generating anything new. The other things that are in play here, we've got the 10-week moving average right now, which is at 1867. So we're not likely to go under that. I also discussed in commentary that I thought that, just looking at the number here, we shouldn't get much below this 1961 this week, and we've already moved well away from that at 78. So that should be the extreme for the week. Last week we saw the weekly ranges, be challenged all the way at the lows. We actually made a challenge of the low of the projection for the week. I expect this pattern to be a bit different, even though we closed down just about 1% on the week, 0.09 I think on the S&P for the week. And I guess one of the things I probably should cover here in this section is to bring up IJR, because we saw some weakness come back into the small caps again. And also it looks like when Mitch goes through the rotation of the database, we also saw some commodities and general selling across the board, but not very much materially, about 2% of the entire database, which is pretty immaterial. We're still at 68.7, I think, percent bullish. Let's go ahead and look at the monthly graph just to get that perspective here. And the monthly graph is continuing to be as bullish as it has been. Matter of fact, it's increased just a touch. We're at 162 on PPM1, 160, and I'm right in the way there, so you can't see these numbers, but it's 1.08 on the 40. So I'll bring up this here so you can see it here on down below here. You can see these numbers, and I'll bring this up just a little bit. Didn't mean to bring it that big, but now we've got it. It's completely, I'm in the way again. Sorry about that. But here's the so we're at 162, 160. So we're expanding slightly, and what I'm looking for here is that the 10-month moving average will start to lose some momentum and start for the 21-month to gain on it. And that's going to be the first sign that maybe we're coming into more of a significant high. At the moment, it's just kind of maintaining status quo. We were at 161 and 160. They were real close, and now it's ticked up to 162 with some of the strength today. So possibly if we get a breakout this week, if the whole Yellen speech and all that actually gets us into a breakout mode, we might see maybe this PPM number 1 on the monthly tick up. We'll take a look at that on Friday. Remember, we're on our summer hours now. We're doing today and Friday, no process warriors during the week. And we've had a couple people ask them. We're really close. We're getting close to the VPM Market Mind release for TradeStation. There's a couple things yet that are still being tested. We're pretty darn close to having that out. So we will be letting you know about that. That'll be the next big event. And probably what we'll do once that happens, then we'll have some shows and training and how to use and all that for those of you that want to take a look at that. And you can get a trial on both. You're going to need TradeStation to do it, and you'll be able to get a trial on our stuff as well as TradeStation. I think 2 weeks on TradeStation. I'm actually in contact with them right now, trying to work out some special deals here for distribution. Anyway, so from the trends here, everything's status quo. So let's go back to the short term here, and let's switch over. Let's go ahead and bring up IJR here and just take a look. You can see this is the daily graph on IJR, and you'll see that we did see a pretty good decline. In fact, it was 3.9% last week. It was pretty hefty. So we saw a lot of back tracing, and you're seeing the same thing that I was talking about in the earlier. You see these little dots here. Let me just point them out here so it'll be easier to see. And those of you with bigger monitors, you'll be able to see this pretty easily. But you'll see there's objectives being regenerated from the VPM projection tool, and it's just not they're not able to maintain these patterns. So now there is a slight upward pattern, but it's now more of a retracement of maybe 30-40% of the value. So what's happening is the patterns are breaking down. It sets up a new pattern, it projects out, it breaks another low, and now it looks like it's stabilized enough now that these last objectives are probably good. And I'll just look at what that is real quick here. That is for on this index, 112, let's say 111.50 to 113.20 is the objective, and that's not going to represent much. I'm going to bring up a tool here, price. We'll bring up some lines here. You can see, you won't be able to read the numbers, but see if I can spread this out just a little bit so we can see a little bit. But you're looking at right now a 50% retracement is 111, and a 76% retracement would be all the way up to that upper level here where I have a cursor. You can see that, and that's pretty much the I guess where the pattern is going to be done here. See if I can get. Last time I tried using this tool, it wouldn't come off the screen once I put it on. We'll see if it's going to cooperate today or not. Try one more thing here. Yep, just like last time, it won't come off. I don't know why it won't come off here, but anyway. So we'll leave it at that, I guess. And so the IJR is definitely weaker. It's not participating. And one of the themes that I've been talking about that is I mentioned briefly last week that I want to bring into the I guess the conversation here is that one of the elements that has been occurring literally since the crisis, 09, and I think it's in the just everybody just looking for yield. There's this desperation to buy yield when all you had to do is buy a few stocks and you would have made 5 times what any bond would have made ever. And but the yield, the quest for yield continues, and all these junk bonds. There's a lot of the small cap area has been pretty much on most of these returns that you see in the IJR have been probably, the best I can tell, probably 70 or 80% of those returns have been leveraged returns, or otherwise borrowed money to build these business models. The concern is if rates do go up next year or sometime, there is a ton of money in 2015 that has to be rolled over. There was a lot of 5-year paper done, so a lot of stuff got done in 2010. So it's in the note of like 1.6 or 7 trillion. It's been several weeks ago I read this report. But what that means is if rates were to go up too much, or let's say the treasuries were more attractive than buying junk bonds, and the treasuries or something else was a place to grab yields without taking a lot of risk, if the appetite goes away for these companies to be able to finance their business models, there could be some real issues, at least initially in earnings potential, and ultimately maybe more of an explosive type situation where there could be some failures and some other things start to happen and bring some risk back in the marketplace. If you think about it, right now, it was brought to my attention the other day, there is $7 trillion of more debt than there was in 2007 on the books. So think we don't have risk? Probably not the case. It's all being managed, and it's now the perception that the Federal Reserve will forever manage the risk, and life will be wonderful. Tulips and daisies and all kinds of fun stuff, whatever.
Rainbows and sunshine.
Yeah,
right?
Whatever makes you feel good, that's what you got coming. So, but yeah, so at least that's the general perception here of what's going on. Really frustrates me that I'm never using one of these tools again. I think I just want to get this thing off of here real quick. It's bothering me to the point there's no way it's letting me get rid of this thing. It's really bizarre. Ah, I got it. Yay. A double delete. Real fast did it. So anyway, yeah, that'll open up things a little bit. But so let's look at the weekly really quickly here. The weekly suggests that we've got more sideways action than any kind of material action that you might see. So it's really, I'm going to draw a couple lines on here real quick. We'll go to treasuries, and then we'll go and let Mitch cover some of the rotation and some of the things that went on within VPM this week. Like I said, with doing the two shows, I'm spending a little more time on indexes, so this stuff will be valid for most of the week and what I'm trying to do, and then we'll recap on Friday and see what came up. But I think this is somewhat interesting in that what we really have here is this sideways band, and this has been going on for a while. Most of the action in the small caps actually occurred much earlier in the cycle, so they led the way, and then they've been lagging for a while if you were to look at these indexes side by side. And really what we've got is this big consolidation. So whether we end up breaking out, like I'm drawing the arrow in there, or not, it'll be difficult to tell whether that's the case. But the definitely the pattern is there, and it's a typical pattern that's been unfolding. I remember weeks ago discussing where we get these elongated. We went sideways for 13 weeks before we broke over the what was it, 1840 something number. I forget what 1842 comes to mind. But once we finally broke over that, then we went to the whole next level and went 130 points. And we're getting the same kind of, this is actually much more elongated than that. We go all the way back to last October. So we're looking at maybe 6-8 months of consolidation. And within here, it's interesting, if you go from the top to the bottom, we came not quite to, but the a 10% correction within some of the peak to valleys here. So this has been kind of a rotating correction, and whether or not the debt situation comes into play is yet to be seen. But this is definitely still a positive pattern, even though it's been lagging. And this is even better. There's probably one more rally on here. I'm looking at the monthly graph now. That's probably the final as far as the monthly goes, and then we should see a pretty amazing decline. When you look at this chart, it's actually almost funny. Look at the 08-09 crisis. It looks like a joke. It looks like a regular correction. So if, it's just been completely. I mean, look at this run. We've went from, on this index, we've went from 2992 on the low. That's the low, all the way to 110 right now, and that's what, a five bagger. That's big, right? That's pretty close to it. Not quite, but about a 4 or something. That's that's really big, And but these trends and this is actually, I'm really glad I brought this up. This is the thing that I was looking for in the S&P. If you look at this, PPM 1.97, it's actually starting to lose a lot of momentum. It's below its first and second derivatives, and then you also have the you got PPM 2, 173 and 108. So the other two averages are moving faster than the 10, and they're starting to contract. You can almost, I talked about the number getting under 1 even, or 1%. So it's starting to decline. If this continues this momentum, we could see a spike out of here, and then a sell-off back down into the 21-week moving average, and this is a monthly 21-month moving average, which would put us back at 97, which would give us about a 15-18% correction. So some point in time, somebody's going to lead the way, and this is going to happen. And maybe we get a 20% correction in the small cap, but maybe only a 10, 12 or something in the S&P when we get to that point. We're not there yet. So let's see here. I think I'm going to turn over I'm going to bring Mitch back in with me for a second, and then I'll let him take over. So let me bring up, here we go. I'll get back to the main dashboard, I guess, and get you set up. Alrighty.
All right, so let's see here. So as we discussed earlier, we saw some pretty broad selling this week. Just taking a look at it right now, had about 1,000 total exits across the two different systems this week between 1.2 and 3.2. We didn't see any distinction between 1.2 and 3.2. We'll cover that in a second. But when you look at the sectors, you see that there wasn't any large concentration in one particular sector, and that goes true when you start skimming through the groups as well. It's pretty evenly spread out across the market. What I did next is I went to the mutual fund side of things and to see, well, was there any sort of noticeable concentration? And I don't know about you, Bob, but I happen to see quite a bit of concentrated selling in one particular category, at least at this level.
Which one's that?
Commodities.
I want to make a comment real quick on this other across the board stuff. I mentioned last week when we were just talking about the database. I just want to bring it in real quick, and because what's going to happen with a lot of these trades, we got up to almost 71% long again. We see it back off to 68, and you're going to see a rotation here in these markets and in these signals, and it's okay. There's the trade impact of these trades, whether they come in and out. The $7.95 ticket fee is not your enemy; it is your market, and they're going to have very little impact. But you don't know which one of these trades are going to be the winners at these levels and who's going to rotate. So didn't really look at. Maybe Mitch has some feel, but I didn't really look at to see how somebody's going, but I do have a discussion when we start talking about sectors here. So sorry, Mitch, I just wanted to bring that back in.
So what I'll do is I'll just skim through this, and we'll get down to commodities. And when you see here the way that we have commodities mapped out within our system, we're looking at just pretty much all the commodities in a broad sense within the list. So we saw a lot of selling. We'll cover that in the stock of the day soon, as far as the activity in both gold and oil, because I think there's some action taking place there. The other thing you'll notice here is we had some pretty sizable selling in the international space. So you see here we had a 10% sell-off in the international funds, and this lines up also with what we've seen in the globe at a glance, where a lot of indices that were up a couple percentage points for the year going into last week. In these European markets, last week they saw some massive selling. Obviously, a lot of that has to do with the news over in Portugal. But a lot of those indices, which had been positive, almost double-digit positives, are now negative on the year, and we also saw some selling across that. So, again, you're seeing some broad-based selling in the large cap, small cap, and mid cap spaces in the foreign mutual funds. So if you have any of those components within your portfolios, you probably saw some activity. Last week, I think it was, or 2 weeks ago, we sold out of EFA. So we actually sold off that position prior to a lot of the correction that took place just this last week. So that was a great trade on that one. You could also see this when you go into the weekly research, where we break down some of these signals. We're using the 50 different single country iShares ETFs. And you'll see here that there's been quite a bit of selling across the board in these European countries here. So a lot of these developed European countries saw some selling. Brazil saw some selling. I don't know if that has to do with the getting kicked out of the World Cup last week, right before the finish.
All I can say is thank God that's over. They got way too much.
Got my Google page back, right?
Way too much airtime. I'm sorry. I don't think I'll ever embrace that sport. Like, just too American to embrace it. But yeah, go ahead. I think some of the selling in Europe that we're talking about maybe was related to some of the sentiment change that's happened around Portugal, but it's actually the fact that I mentioned earlier that the ECB chair Draghi is talking about further stimulus and cheap money for I think up to 4 years. They call it like a TLRTR or something. They got way too many letters in a row. It's like a mutual fund. It's got like 5. They couldn't just call it TARP or something simple. They didn't. Maybe the boys in London have a term for it. Maybe they put a word with it, so we can do that. But but that's why this stuff is coming out, because there is a continuing risk there, and it's like 2011 still surfaces once in a while, and everybody's fears comes back out, kind of in a crazy kind of way, I guess.
Yeah, and to be fair to that, a lot of those issues still haven't been fully resolved. As you said earlier, yes, things are operating better for a lot of these countries, but a lot more leverage has been taken on as well. So time will tell. It's sort of reminds me of like the Beanie Baby craze back in the 90s, where everybody knew that those things were really worthless, but people were willing to pay for them, and so they were trading them hand over fist and making money off it.
Don't get me going, because my ex-wife was like a freak. I kept telling her these things are actually not worth anything. They're like $3.95. I saw her pay $300 and some for a Beanie Baby and sold it at a profit. I will give her that she was a pretty good trader, but man, what a joke, huh? But that's another one of those fads that comes out that goes on. So
well, and it's in some degree, I think that's what some of the perma bears are viewed as right now. I mean, yes, when it comes to fundamental valuation, maybe they are correct as far as the market is overpriced and all that, but it doesn't really matter what is overpriced or overbought, because the market's still trending.
So you led me right into it, didn't you, on purpose?
I did.
John Husband. Why would anyone listen to this man? Oh my gosh, he needs to be in a classroom, not in a trading room. This guy is a professor, one of the so-called smart guys who hasn't. Matter of fact, Mitch, what was it? You built a portfolio and did a buy and hold on all of his funds, and he's lost 5% over the last 3 years or something. How much?
Annualized, 5%. He's it's ugly, to say the least.
Yeah, I mean,
you could pull up one of these tickers if you want and go through it.
Yeah, it's crazy. I don't know how these guys. I guess maybe they're entertaining. Maybe they're smart enough that people listen, that they want to listen to CNBCs and the media grabs onto these guys. But man, I'm telling you, the ETFDI with SHY in there, and you're sleeping for 4 years. I don't even know how many times. I mean, it's like a 60 or 70% gain in that, and so it's just. There's just a lot of stuff out there. There's a lot of illusions. There's a lot of things that are out there. We've got, as long as he was, reason why it's interesting, because there was an article I ran across over the weekend, maybe last night, that, he's saying you should get out of the market now. It's overvalued. And this is a guy who never got in the market. I think last time he was in the market was 1992. I mean, the guy just has missed everything. And I hate the, not talking badly about John, but I'm certainly talking badly about his abilities, which to make money for investors. And but I know he's widely read, and I maybe it's a good contrary indicator. Maybe that's why people read it, to find out what you do. You fade him. I used to always tell people, if in the days when you had brokers and you were soliciting orders, if your broker was always wrong, you had the best broker in the world. Just fade him. Get a Charles Schwab account and put those trades in over there, and keep talking to them. Let them do small trades and do the big trades on the other side. So you spread them 2-to-1, 3-to-1. So, but yeah, so it's difficult when you see a lot of stuff in the investment world, and I know folks get concerned about different elements. It really comes down from a VPM standpoint, what you're doing when what you've got in it. It's the GIGO. So if you put garbage in, you're going to get garbage out. If you get, just like we're looking through IJR, IJR really hasn't done anything for quite some time, for well over a year. And prior to that, it had a long trade that was on from like 2012 to sometime in October of 13. It got out, and there really hasn't been anything to do. So if you have a small cap index and you've got a equally weighted situation, you're just going to be lagging, and it's just going to draw you down. So you're much better to be off and have a way to rotate these things. So
yeah, and then let's jump back over to the 2.0 system, and we'll just finish covering up some of the activity this last week. Let's see. So we go over to the research side of things, and then go to the All Stats page. Again, we could see that, as we mentioned in commentary, currently 68% long. And then you can see when it comes to the current exits, some weeks we'll see that the trades will favor one of the trade systems versus another. And here, as you can see, we had 400 sells on the 1.2, about 600 on the 3.2. That's pretty evenly matched when it comes to the total amount of sells and as you see here, when we re-optimize the system at the beginning of this month, we're almost exactly 50-50 between the two different trade systems. So we did see a slight exit across the board, but again, it's 2 percentage points. It's very minimal when it comes to the amount of exits. Really, where we're seeing the largest exits are in that commodities and foreign.
I don't remember.
Space.
Do you remember what the mapping was before it was slanted? Was it slanted 3-2-1-2? Do we know that?
It was slanted to 3-2, but
It
less,
evened out, yeah.
Yeah, it was about a percentage point.
Yeah, and I think I mentioned before, so I'm sorry if you already heard me say this. It's but it was 60-40 many years ago, back in 2000. And the big shift happened in 2008 when we saw volatility kick up, and we saw a lot of 1-2s come in. So there was about a 10-12% shift in the database since that time, and it's maintained that shift. It continues to ebb toward the 50-50 mark, but 1-2 seems to be more dominant in the last few years than in the past.
So with that being said, let's pull up gold and oil. Those, I know we had a sell in oil this week, and gold got hit pretty hard again today.
Yeah, I keep seeing that supposedly gas is cheaper. I paid $4.09 for premium the other day, so I think the only one that's beating us is like the Bay Area is like $4.17. I don't know what's going on in Arizona, but yeah. Anyway, I paid $4.09 yesterday.
Yeah, it's $3.50 up here in Minnesota.
Yeah, I don't know. I don't have any cars that don't burn premium, so I don't know what the differential is.
Yes.
But I think it was like $3.75 or $4. I think is what it was around that, and I didn't really pay attention. So, anyway, we're going to go to.
Let's do start going to the stocks here. Stock of the day. So let's pull up oil. Right now it's on the 1.2 weekly system, and we had a fresh sell on that today.
That helped. Hang on a second. What is the symbol on that? It's just oil, right?
Oil. Yep. And again, this is an ETN, so. The price isn't going to match perfectly with what the commodity of oil is trading. It's kept pretty close when you compare the rate of change though on it. But right now, oil is mapped on the 1.2 system. We got in it back in February.
Looks more like an EKG.
Yeah.
It's I think the actual crude price is probably waffling between 95 and 105, probably maybe 90 and 105. But yeah, so there hasn't been any real big trends, which is, I guess, good. Last time we had a big trend, I had just a second ago. I'm going to bring this back up. We had the monthly graph here. You can see a steep drop. In 2008, when supposedly everything was collapsing, we saw, the crude price skyrocket and then plummet here, and then we're just been in this stable range. In a range, though, that Saudi Arabia is quite happy with. And now that we are one of the largest oil producers, we actually, I think, will take out Saudi Arabia here fairly quick. We're down to like 4 to 7 million imported barrels per day. So it's pretty impressive. Boone Pickens was right, by the way. If anybody who followed Boone, he's been absolutely spot on as far as, his what he's been saying is happening, and he's convinced that if some of the boys, Keystone and some of the other regulatory issues that have happened, we'd be way ahead we'd be so far ahead of everybody, it would be amazing, and we wouldn't be importing any oil. And I know he's been beating that horse for quite a few years now, and nobody's listening, especially the last 5 or 6 years for some reason.
Yeah, in that same vein, one company that we had talked about a week or so ago when we were going through some of the domestic shale oil producers is ticker KOG, Kodiak Oil. And
yeah, they got bought out, right?
Got a buyout announcement. So anybody that was using that one, we got in.
What's the model?
KOG.
What's the model?
1.2. So
Okay.
Should be the same trade system.
Okay.
So yeah, we got in back in April at $13, had an 8% gain going into today. Today it's trading at $15, so total that brings up another 5-6% gain onto that. So
Nice.
it's done very nice.
Yeah, I mean, oil and more oil. There's some of these domestic guys there's been great plays there. So it's just a matter of time until some of these other folks start to step in and buy some more of these smaller properties that are out there.
Yep. One other thing that's just interesting to note, or worth noting, I guess I should say, in this case, this isn't a straight a cash buyout. This is a share buyout. So what's going to happen with Kodiak is any current shareholders that are going to get their shares exchanged for whatever Whiting Petroleum is trading at. And so this one's a little bit more of a moving target when it comes to how it's trading versus its buyout, as opposed to simply getting a flat $15 a share or something along those lines.
Right. And one of the other things is, if we look at just the trend here, we got PPM1 2.21 just changed, and 2.18, 2.52. I'm right in the way of that stuff, but all three in trends, as well as expanding, massive expansion on the PPM1 222, double the rate just about of the PPM2, which is the 21-week moving average. So this thing is screaming, and the probabilities of it dropping much is about zero at the moment. So,
right.
Especially with the deal on the table.
Yeah. Yeah, another energy producer is Chesapeake Energy, a stock that I know I've traded in the past, CHK. This one's currently optimized to the 3.2 system. It's part of the S&P 500, got a fresh sell order this morning. And this is a trade a trade that we've been on for some time. Looks like we got in back in January of 2013. And in this case,
is this
we're
a
up
3.2?
3.2, yes.
Yeah,
3.2 weekly.
I was going to say must be, because 1.2 is not doing that.
Yeah, got in January 22nd, 2013.
There you go, way back when. Yeah,
way back when, and
there's
sold,
the exit long there.
Yep, sold this morning with a gain of around 58%.
Yeah, the difference with the TradeStation folks, if you do end up embracing this technology, is it updates real time intraday, so it's already taken the signal out on the. You can see here the exit long has already been is showing up, where you won't see that until tomorrow after we go and collect data on BPM tonight. Then you'll have that, but it's all happening. Trust me. Yeah, and you're seeing the PPM's minus 4.9 on a short-term basis here. So maybe some of that is a very, very long trade. Great tax efficiency, long-term taxes on the tax treatment here, and these are a continuation of some of the rotation that we are seeing in the database. Is these long-term trades that have been on, especially the 3.2 stuff that's rolling out. They have a tendency to be longer. So.
Yeah, this has been a great stock to own over the years. Just looking at the trade log, prior to this, we had a slight loss. Took a loss of 11%. Before that, it was a gain of 18%. Had some flat trades, gain of 24%. Another loss of 8%, and then we had a 42%, and then a little bit further before that, we had a gain of 100%. So this has done very well over the years of a nice domestic oil company, or energy company, natural gas, I believe.
Yep. Yeah, I just brought it up while you're talking, okay. So just so you can see that, I can pop up the trade log here.
Yeah, so it's got a strong net profit over the years. It's got a nice high winning percentage.
I got the right one here, yeah.
Yep.
Chesapeake, yep. Yeah, the you see the percent profit total, 2,837, 17 trades. I wonder if there's a bad trade there. 40% winners, 41%, 17 trades, 7 winners.
No, it's not a bad trade. This went from a penny stock in the 90s up till I think it was mid 90s. I'm just pulling it up in Portfolio Expert. Traded up towards around $30.
Wow.
So it has been pretty volatile over the years, but VPM has done an excellent job of capturing the right trades.
So bought it at 3 cents and sold it at $20 or something.
Got it, yeah.
Okay, that's good. It's nice to always know that not everything's a pump and dump.
Yeah.
They actually are real companies that start off that way.
That's right.
All right, go back to Trade Station. We're down to, we've got about 11 minutes to go. So, one of the things, let's go through Citi. What is that symbol again? Is it just C?
Just C. Yep, and it is to the 3.2 weekly.
My head's stuck. I've been around too long. Still in Chrysler. I'm thinking Chrysler C. But, so we've been out of this trade for a bit.
Yeah, we have.
And rightfully so, even though it's doing a little better, it's not really doing anything. Although you have a short-term trend level, PPM1 is 0.32. I'm kind of in the way of the other two, but they're flat, 0.02 on PPM2 and minus 0.04 on the 40. So they're above that action there, and so you really have more of a consolidation going on. Another one of those elongated consolidation patterns, which usually set up when they do this, they'll tend to break and at least retest the highs on the pattern. So there's something to be said here, and maybe one of the reasons why there's positive action going on in this stock after missing earnings and getting $7 billion penalty, that maybe they figure they're gone and now Citi's okay to go try to rebuild and make money again. Maybe that's what this is about from a sentiment standpoint, or what investors are thinking. They're throwing money in this thing. I suspect there's only 24 million shares traded, so 24 million 04005 now. So lots of stock changing hands here.
Yeah.
So much for buy and hold. Who's trading all that, right?
Yeah, do a monthly chart on that and look at the last 5-10 years on Citi.
Oh yeah, that tells the whole story, doesn't it?
Yeah, it tells you everything you need
there
to
you
know
go.
about
That's a great perspective. Thanks for bringing that up. So this thing's been a flat line. Another one of these crushed stocks that just never rebounded. Now we can look at other ones like Bank of America and Wells, and they don't look nearly like this. So. What is that, BAC?
Well, that's Bank of America.
We're on a run here. This monthly. They haven't come back that much, okay? And I think Wells never WFC for Wells, right?
Yep.
If I can get the right place. WFC, and Wells is a much different bank, and it always has been. And even in the crisis, they rebounded quickly. All of a sudden, everybody realized they were the golden boys out there, and they didn't have the same infrastructure issues that certainly Bank of America and just everyone else had. Certainly banks that are no longer WAMU and other folks that were out there. And I think Wells has already paid their dues. I think they've been fined for the mortgages, and I'm sure Bank of America has been hit. So I think that's what they're making the rounds. It's going to be interesting to see what Mr. Holder and his clan have up for the banking system next, where they figured out where they can get some more money at, and that's it appears to be, what did you call it earlier? Some kind of like gangsters. What did you say?
Well, it's like going to the mafia. You paid for your protection, and now you really have to pay for it.
Yeah,
they're coming back around.
Yeah, they're coming back around to get paid again. Yeah, so. Like I said, I don't know. Maybe it's the right thing to do. So, what do we got next?
Next up is Verizon, also on 3.2. VZ.
What is that? VZ, yeah.
That has a brand new buy today.
I'm showing. You sure it's 3.2 or 1.2? Because I have.
You have monthly pulled up.
Oh, I do, don't I? Good call. Thank God Mitch is on, right, folks?
Yeah, there we go. Friday was
keep me straight. Yeah, Friday was a crazy show. Actually, I'm not sure what was going on. Position of the moon or something. I don't know.
It's that
maybe
supermoon that came out last night, I guess, right?
It had to be something. I'm not sure what was going on. But I'm just looking at market. We're still hanging in there. We're up 970 yet, but here we are. The new purchase, as he pointed out, that will show up in BPM. It shows up as an order right now. It has already been filled here, and it looks like it's probably done pretty well. Let's see. The open was where's the open? 50.44. It's 50.50 right now, so not a lot there from that standpoint. It's pretty much where it started today. the high's been, 50, 59, and low 48, 68. So there's a little bit of selling. We can actually go in here and be real cute and go to a 5-minute graph, and you can see this is today's session here. So a little burst up, opened higher, kind of flattened out, and then kind of creeping, doing a creepy right now. And 60-minute graph, you can see that's moving right along. And VPM bought this thing a while back here on the 60-minute, back on the 9th at is that the right price here? There we go, at 49.98. So that's not a lot. Looks more dramatic than it is, I guess, when you're on a short-term graph here. But yeah, so from a weekly standpoint, you've got 0.41, 0.32, and 0.18. So you got a pretty good trend developing. You got an expansion going where PPM1 is moving ahead faster than 2. So the trend is developing. This is still very early stage. And one of the things that VPM will do is to recognize these early stage patterns that are breaking out, and then now once it's got a position to be monitoring all of these momentum and different structure from the standpoint of the patterns and things that are going on. So it definitely looks like a decent trade here, whether there's a lot on the upside. What are we showing for the from a statistical pattern on the trade profile? What are we looking at?
Moment, and I will tell you.
Yeah, and so see what we're looking at there, what the average trade is. It's interesting because there's some right here. There is the price objectives here for the stock to move to 53.23 to 56 even. That's solid 10-12% just off of the initial pattern here that's being projected off the VPM pattern finder and VPM projection tool. But so what's the answer?
Average gains are about 19.25%.
Okay, so you get about, it looks like 10-12 just out of the pattern here. So 50, probably 56 to 60 is a good range for this stock. Maybe there's more in there, but that would be a new high, I believe. Let's go over to the monthly and see what the history of this particular stock is. Now it would not be a new high, but it would be a new high for this pattern anyway. The old highs back in the heyday of the pre-dot-com days. You stole my mouse. Hang on. Let's see here. Stop that.
Here, let me get my mouse off the page. There we go.
Anyway, it is 69. So we got a ways to go. Maybe there's a challenge of those highs coming. That would be what we say 60. So it's still another 15-20%. That would be a pretty good run. That'd be some 30-35% run to get to the old 2000.com bursting high.
Yeah.
So I'm excited. I got my new Amazon Fire phone. My Fire phone coming, and all the game developers are working on all this cool 3D stuff. So we'll see if what happens. I don't think they've sold very many. I think they're talking about selling 2 or 3 million, but they got all the marketing power. So Amazon, we'll see how Amazon does with that in a couple of weeks when we launch that. I think the 25th is when that comes out. Let's see, minute and a half. Any closing thoughts? Anything here? Anyone?
No, I mean it'll be interesting to see the comments that Miss Yellen makes later this week. As you had said earlier, she hasn't really been making very many comments that have moved the markets. I think any of the comments made by the Fed have all been the regional Feds that have said something that has shook the markets a little bit, and then someone else, one of the other regional Fed
contradicts him.
Contradicts it, and then everybody goes, all right, they don't know what they're talking about.
Well, that's because they got a phone call, don't be stupid, don't say that again. And then somebody else counteracted it. So let's face it, it's a PR team. I did bring up the EFA. You can see I talked about looking for the U.S. markets to stop outpacing the European, and that's not happened. There's another leg down yet. This is EFA, which, as we mentioned, we sold that out, so it continues to be weaker. And then this is EEM here that we've got here. see if I get, yeah, this is EEM, and this also. So anyway, we're about 30 seconds out, and so remember, Friday's the next time you'll see us. Stream us, comment, tell us what you want to hear, anything that you have. We're more than glad to help you out. That's what we're here for. And like I said, we're a little ways away, but we'll be announcing when the market, it's going to be called VPM Market Mind for TradeStation. When that comes out, we'll get you the news, and we'll do several shows around training and how that works and all the dynamics that you'll have available to you as VPM users. Anyway, have a great day. We will see you on Friday. Thanks a lot, folks.